Alright, welcome to another video, ladies and gentlemen, and in this video we're going to be talking about the difference between trading and investing. This is the third video in my really beginner's course for the stock market investing. If you haven't checked out the website yet, man, you are missing out on all of these market calls that I'm giving out, and you can actually benefit a lot from that. But anyway, since you are only a beginner, you can go ahead and sign up and I will have space for you. And in this video we are going to be talking about trading and investing and what is the difference. Alright, so let's really begin by talking about exactly how a trader thinks of making money and exactly how an investor thinks of making money. So let's go onto the laptop screen and check that out. Right, so in this case, first thing that comes to your mind in case of a trader and when you're comparing it with an investor is that the trader has a short-term mindset. He does not want to invest his money for a long time. He does not want, long time investments which give him about, let's say, 20-25% returns per year. He wants to invest the money in trading styles or fashions that give him the returns within a few days, a few weeks, or maybe even a single day. So essentially he will be going for intraday, or he will be going for swing trading or something of that sort. But again, I'm not saying trading is a bad thing. Trading can definitely produce a whole lot of money as well. So let's continue watching over here. What else does a trader use? Alright, the traders use technical analysis, and if you're unfamiliar with technical analysis, it's a whole realm of really deciding when to buy the stock and when to sell it. Alright, and let me tell you exactly what it does. Let's say you want to pick out a stock. Let's just take let's say L&T, Larsen & Toubro, that is, and we're just going to pick out the stock and we're going to check out its graph. Right, so this is the candlestick graph, really showing you the variations in the price of the stock over, let's say, I don't know, it's a few days or something, but you can change that. Again, the whole aim of technical analysis is to tell you, after seeing this chart, when to buy the stock and when to sell it, right? Because if you follow that right, and I personally am not a huge fan of technical analysis, I follow more on the fundamental analysis, but let's just to give you an intuition, technical analysis would basically be telling you to buy the stock over somewhere around here when your price is somewhere around over here at the beginning of this large green move, and then you would be getting on the top over here and it would be telling you to sell it basically. Now it's not always that simple, and I cannot explain technical analysis in a short video, but it's a whole series of videos in itself, and I will be making a course on that as well. Alright, so anyway, after that, the trader loves volatility. What is volatility? Volatility is that the stock moves up and down, and it just keeps on doing that a lot, and it does that rapidly. So it may go a lot up in a span of 1 or 2 days. It might even go a lot up in just one day, so that would be intraday. But traders love volatility, and it can go down as well, and traders can still love it, and I will show you exactly why that is. If you do not understand that, you need to watch the video on short trading, which I'll be making next, so you'll be understanding that as well. But again, trader loves volatility. Alright, the next thing is that he does not care about what the company is doing. In this case, we're talking about stock market trading, so we're really looking at companies. We can also be talking about forex, where you're trading currencies like pound for US dollar or something of that sort, but again, in this case we are talking about companies. So he doesn't care what the financials of the company are. He doesn't care exactly what the company is doing. All he cares about is that he makes his money within a small amount of time using technical analysis or whatever he has. And there's a whole lot of other things that he can have at his disposal, but let's talk about them in the further videos. Next is that he can trade penny stocks, and if you do not know what penny stocks are, you can just think of them as stocks which have a price of less than $1. Alright, so if stocks have a price of, depending on your country, you might understand that, just build the analogy, a price of $1 depending on your country, whatever it translates into, anything less than that is a penny stock. Alright, so traders would love to do that. Traders can trade in penny stocks, and it's totally fine for them. But in case of the investor, and let me tell you what the investor is looking at is a long-term investment. He wants to put the money in the market for the long term. Why? Because he realizes the power of the long term, and he knows exactly what kind of returns he can get. And he would usually be putting in his money for at least a few months, let's say 4 or 5 months, and he would be carrying it over for, let's say, he could have them and he could hold these stocks for over 5 years, 10 years, depends on him, however long he wants to keep them, really. But in case of investors, you could have the range as a few months to a few years. All right. So that's the major difference. The next thing is fundamental analysis. Investors love, and they exactly, once you actually kind of keep on looking at the documents, you understand what they're telling you. So investors love to check out the company's financial documents, and on the basis of that, they love to make decisions. All right, this company is going to give me long return, and the way they do that is they really value the company, and this is the way Warren Buffett does that as well. So it's really interesting actually, if you understand that he actually values the company. He says, all right, I looked at the company's financials, the balance sheet, the cash flow statement, the income statement, all these things. He looks at them, and then he tells that, all right, I think I would pay this much for this much money for this company, and then he calculates, in a reverse order process. He just calculates the stock price that should be for that company, and then he looks at the actual stock price. So he never really looks at the actual stock price before he has to buy, right? He looks at the documents and he deduces the stock price according to his algorithm, and then he checks out that, all right, you know what, I think this is undervalued, because according to me the price should be twice that, or maybe even thrice that. So maybe people will realize that in the long term, and that's how it will grow. And this is exactly the kind of approach that he follows, and it is working great for him. It is working wonders for him. Billion-dollar man. All right, so anyway, fundamental analysis, you look at these documents. Once you keep on looking and you know exactly what to look at, and once you have been coached, you must develop the skill. All right, you can write this down. If you want to make money in the stock market, you must develop the skill. So if you want to learn fundamental analysis, I will again be doing a series of videos on that, so that you can understand exactly what you're looking at, exactly what you're dealing with. All right, there's a whole lot of documents, 10K, 10Q, and all of these balance sheets and all of that, so you can check that out as well. Anyway, next thing that you want to look at is that the investor does not worry about the short-term price movement. He doesn't care. It doesn't concern him. What concerns him is, in the long term, the stock will rise and his money will rise with the stock. All right. And finally, he wants companies with good balance sheets. Again, that is the thing we talked about, fundamental analysis. So anyway, if you understand that what you want to be is a trader, or what you want to be is an investor, it's nothing bad. Really, people have made money in the stock market in different ways, and one of these approaches might suit you better than the other. And personally, I am a swing trader, so I am very proud to accept that, and I love the way I make money, and I make a lot of money in swing trading. And you can do that too by following the tutorials, by the way. So anyway, if you want market calls where I tell you exactly which stock to look at for most of the countries, you can follow me on Instagram for that, and you can actually check out my website, log in over there, and you will get the updates through email or through notifications on the website. All right, the next thing is that I post regularly, by the way, these kinds of things. You don't have to go through videos for these. Most of these things I post on my Instagram daily, so you are missing out on a lot if you have not followed me over there. Anyway, if you have any questions, just hit me up and ask me the questions over there. You have my handle right over here somewhere. And I hope you like this video, and I'll see you in the next one.